Good morning, everybody. Day 2 of the one trade BloFin trading tournament. Hit a really nice trade yesterday. I'm hovering between second and third. There's one person, I don't know who it is. I've been trying to figure it out. Maybe it's Chris. I don't know who it is, but this individual took a gamble and it paid out for them. They're sitting at almost like 90% up already just off day 1. Bilbo absolutely smashed a shit ton of trades yesterday, and I'm neck and neck with him right now. My trade from yesterday, I laddered in like around here on this wick, and then I laddered in more into here, raising my average. I had a take profit one set here that got filled on this wick, and then I'm going to let the rest run towards here, but I did take more profits here just before CPI because I'm expecting a pump to the upside. We've gotten the early part of that pump so far, right? So I took profits in here before CPI because I thought we're going to get a move up. That did happen, and now I'm looking for more of an extended move into this zone to where I can short back down to get a sweep of Monday low. And then from there, I'm probably going to be done shorting for a while. Unless something like weird happens, I'm going to be done shorting for like a while. I would say that BTC is going to bottom potentially right here or somewhere, you know, in the zone. Some shit's going to happen. I think BTC is going to bottom soon, and your boy is going to flip long and only long for a while. So good day yesterday. I was following, there's a couple different fractals I was looking at. This one in particular really stood out to me. This isn't exactly what happened, but it really helped me like get a good idea of what I was looking for the trade. And that was essentially, I just wanted to see price range in here and then break down. It did. We basically filled this fair value gap here and have been, you know, ranging and chilling since, basically. So this pump to the upside is off of CPI pre New York. So given the context, I absolutely expect this low to get taken out. I think this is going to pump up into here, and it's going to make people think that, oh my God, like that was the bottom, I should long. And then they're all going to get wrecked city on a very aggressive move to the downside. So that's what I'm looking for today. That is my trading plan. That is the plan, lads. It's not going to, let me know, by the way, if the music's too loud or whatever. I got on the comments, or if I should turn it up if it's not loud enough. You guys let me know. So I really like this fractal. This is a part of our larger fractal from this. So this is the move down. This is that bit right here. That is this, just zoomed in. And then we kind of have up only from there. And that's really what I'm looking at. This whole thing has been hinged on this price action right here. This looks very similar to me, but as I have said, the context is very different. So, you know, yesterday we were basically in here, and that's why I shorted. I took that short position. We got a move down. We consolidated. This is CPI. This was actually CPI, like at the time, Tuesday, July 15th. CPI, we pop up. People are longing whatever. We wreck the early longers, and then the ascent begins. And it was a full moon 2 days ago. You know, I'm not like whatever, but I'm gonna tell you, man, that full moon, new moon shit, there's something to it. Kind of just add it, you know, to my general bias, and you know, with those full moons, it typically means you're gonna bottom. So I'm looking to put in a bottom today. I'd like to sweep that Monday low. How low it goes is to be seen. We still have a CME gap down to about the mid 117s. So that lines up really well. You know, mid 117s kind of bring us down into potentially taking out this low or double bottoming. You know, mid 117s, we have liquidity here, 117,450, 117,600. So that lines up very well with it as well. So yeah, you know, there's just I see a lot of, there's also a buy wall here. This is a really nice buy wall. What is this? Yeah, 328 BTC, another 300 here. That's a lot of fucking money. So yeah, I'm looking for that move up, gonna short it back down into this zone, and then I'm very likely, you know, I always try to stay open to whatever happens and opportunities, and really trade the charts and not have too strong of a particular bias. I need to be flexible. But right now, with what I see on the charts and my context and my analysis, generally speaking, I'm thinking to myself, this will probably be the last short I take for a while. Probably be the last short I take for a while. What's up, Deems? What is this? Binance, decent longing going on here. Not too crazy, but decent. Take a look at sessions. Yeah, naked session point of control at about 120. Fuck, dude. This is going to be so lit. This is going to be so fucking lit, dude. DNPOC 121. Yeah, another 120 mark. Oh, this is going to be fucking lit city. Shorts getting wrecked. Longs. Yeah, this is fucking GG no re, dude. I'm absolutely going to short this. I don't care what anyone says. Need it to go higher though. Perfect retest of that range Bob plus daily VWAP. Are you saying like this 120 zone I'm looking at is a confluence for that? I guess I'm staring at a 15-minute time frame. I don't know if which maybe range VWAP or range VA up in here maybe is what you're talking about. Daily VWAP. Daily VWAP. Ah, yeah. Send it to me. Throw it in the Tourney chat. Or wherever, I guess. Bro, I'm gonna fucking smack this trade. Let me price the pump a little higher. Oh, it's gonna top around 9, so we got about 20 minutes. Oh, excuse me. Pump it, lads. Give it a pump. Send it, Aya. I'm fucking ready for it. Oh my god, in the previous day, EQ's there. Oh my god. Oh, it's too powerful. It's fucking crazy. Nah, don't reject here, man. More. Higher. Give me more. Fucking hell. This is crazy. Is it a trap? Is it a fucking trap? God, this is gonna be a thing of beauty. Oh, this is gonna be a thing of beauty. Oh, yeah. Yeah, back test to that. Yeah, very nice. Would have been a nice little scalp long. Drop the stop loss just below that candle. Very nice. Yeah, very nice. Just love it when shit plays out like that. Do not reject here. Pump higher. Pump it. Give me the short. Give me the fucking short, lad. Do not be lame and reject here. So we can already see that this is much different than the fractal here from the last time. It's much slower, and the same can be said for this one. This move down here was not as aggressive as the fractal that we were looking at, right? So we're seeing that this price action is a lot less aggressive to the downside, although still following somewhat of a similar path. And in my opinion, this has a lot to do with the context of the trade, right? So, you know, the last time, what I'm comparing this all to was coming off of a massive move to the upside. So that's this here. This is that deviation. This was the trade from yesterday for the move down, and this was the chop. So it's coming off of that, whereas right now the current context of the trade is coming off of, you know, all of this ranging, right? And so it's already kind of done its due diligence to sort of reset volatility. Point being is that I would say we're going to be in for a fucking pump ski after this move down is done. But again, for me, I still think we're going to get lower. I think that Monday low is absolutely going to get taken. And again, looking at this, like if this is an ABC correction and we look at some targets for that. You know, we're going to be looking at, so it just barely reached the 1, 2, 3, 6, which is good enough for me. I'd prefer a little higher, but it would be good enough for me. If price were to reject here, it's reasonable. And I'm still, you know, running 25% on my short, so I can still capture some profits on that. I, however, am uninterested, you know, in entering here. For a short, I would rather enter up here. There's just so much fucking confluence there that, you know, for me, I would feel very compelled to enter a position. There's a clear stop. So this is a fine level. It could absolutely reject from here. I'm not interested in it, however. God, I hope it doesn't reject from here. I really want that short. Fucking might be it, though. What's up, Bobo? Fucking shark, dude. Bobo's the fucking trade shark, man. Shows up day one of the tourney, absolutely fucking mogs trades. It's cracking me up yesterday. I was like, what the fuck is this, dude? This is day one. What are you doing? That's crazy. Great way to kick off a tournament, though. I was talking a bit about this yesterday. I was talking about this yesterday. There's absolutely a strategy to trading tournaments versus like your usual portfolio. I'm always so hesitant to share that stuff because obviously I'm in the tournament. And I'm already sharing like all the trades, most of the trades I'm taking for the tournament, or I'll do my best to anyway. But they're absolutely a strategy to trading the tournament, especially if you start with, you know, a nice size portfolio that you can do higher risk trades on, where you're betting 20% of your portfolio. Like this guy, whoever the fuck this guy is, I don't know who it is. I9, whoever this guy is who's in first right now. For P&L, he's like 91% up. You better believe this fucking guy, he risked a lot of his portfolio, whatever size, and he gambled and he got it. I mean, whatever trade he gambled on, it worked. That's how he's up 91% right now. But once you get to a certain point on your trades, like once you get to a certain percentage gain, this is the one thing I didn't say yesterday. Once you get to a certain percentage gain, like 100, 200, 300%, your job is to protect capital. So you could still trade, but you don't want to be risking 50% of your bag on trades like you can early on for your first trade. Because if you blow your account, you can always just re-add the money and run it again. You know, if you have a decent win rate, or you know what your kind of your rough estimate win rate is, or if you can spot a high probability trade, being able to risk a high percentage of your early start tourney portfolio is a good way to put yourself in the lead right off the bat. And if you blow it, you know, you just re-add and do it again until you hit it right. It's really risky. That's how I've always done tournament trading. Some people might say it's better just to stick to your risk parameters. Maybe that works over time, especially because we have a 3-week long tourney. Like oftentimes, dude, it's going to get crazy. Like you'll see people high in the lead with insane like gains, and then they'll drop back down. It's going to get crazy, man. Tourneys get fucking insane. They're so fun. Like it's such a blast. And I love competing in tournaments. Whenever I see one, I'll hop in, even if it's like, I don't care who's hosting it or what it is, but if I see one, I always try to compete in them just because they're so fun. There's also a strategy. If you guys can't hit, like if you're worried about hitting your trading volume, I'm going to explain how that works. Is fucking ad, bud. Trading volume, like if you open a trade, that counts towards your trading volume, but if you close that same trade, it also counts towards your trading volume. So if you open a 5,000 USDT trade, right? That's the size of the trade. 5,000 USD counts towards your trading volume. When you close it, another 5,000 counts towards your trading volume. So if you open up a $5,000 or 5,000 USDT trade, you're getting 10,000 USDT worth of volume by the time it's all said and done. If you find yourself in a tough spot where you're like, oh shit, my volume's not there, the tournament's gonna end soon, or like I just got to get my volume up, you can just open and close trades. You don't actually have to, like, you can just open and close positions and it'll rack up your trading volume. You don't have to actually take a trade. You can just cycle it and just to get that volume up. You're going to be paying, of course, some small fee. You get a huge discount with the one trade referral. So that helps a lot with that. You get 40% off with it, 40% off trading fees. So that's huge. But yeah, there's just tricks like that, man. Like shit that people don't know about until you've traded tournaments competitively to actually try and win. There's all these, you know, someone, I can't remember who it was, but someone was like, you know, the minimum balance to join the tournament is 100 USDT. And they said something like, well, how the hell are you supposed to hit 100,000 USDT volume with 100 USD? And, you know, if you trade it up and you get decent gains throughout the 3 weeks, and you know that last week you're not quite there, you can just open and close trades at break even until you hit the volume. So there's little tricks here and there, and I was like a little hesitant on sharing some of them because I'm competing too and I want to win, but you know, it's the boys, man. I'm gonna share with you guys. Yeah, I mean, dude, like I've taken third. Like the last tournament I competed in was a while ago, and I took third place with like, I think I had like a 39% gain, and I took third. And that tournament, I didn't do the aggressive strategy. I traded normally. Like, I think I just risked like, you know, between 3 and 5% of my portfolio. So it was a little bit higher than like a usual 2, let's say, but it was like a 2-week tournament, or maybe 2 weeks, whatever. And yeah, I just traded normally and I just had regular gains. And yeah, I mean, dude, getting 40% up on your port is insane. Like that's such an insane gain. Like if you can, you know, if you're up 100%, you doubled your portfolio. That's ridiculous. Like people, you know, it's whatever when you're trading that small port for a tournament or something like that. But you know, if you had $100,000 portfolio and you're up 40%, you made 40 grand. A lot of fucking money. Like it's a lot. Man, I don't know if we're going to get this pump up into that 120 zone. It's kind of stalling out here like it wants to hold the daily open to support. Be fucking lit if it did. But I don't know. Like I said, that high is good enough. I mean, it's the 1236. It's roughly the 1236, which is fine for an ABC correction. It's fine. It's not like, oh, crazy, but it's fine. Yeah, on the 618. Yeah, this is fucking, I really hope I catch this. I really, 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 really hope I catch this. This would be such an insane follow-up trade to my short yesterday. I'd be so happy. I would be so happy. So happy if it popped up there. No one would be as happy as me. No one would be as happy as me, dude. Come on, lad. Fucking pop up there. I didn't even look at CPI. What did it come out? Ooh. 2.7. Wow. Fucking crazy. Fucking hell.
I'm 2,500 frames per second of explosives.
This is taking a little bit more time than I'd like. Oh yeah, I don't know if I didn't say this, I don't think, on stream, but the tournament's been extended to 3 weeks. I wanted it to be 3 weeks in the very beginning, but there must have been a miscommunication between me and our rep. He's the fucking man. He's like been hooking us up, and I know he's busy, so I'm sure there was just a small miscommunication, but I saw it was 2 weeks yesterday. It came up in tournament chat, and I was like, fuck, that's not right. It's not supposed to be 2 weeks, and anyway, it got extended, so that's great news. It'll give us more of an opportunity to get higher, to unlock higher prize pools, because the more volume, obviously, that we trade as a whole in the tournament will unlock higher prize pools for us, so we'll be able to have more in prizes. I would love it if we were to reach that 10 million volume. You know what's fucking crazy too? Like, I don't know if you guys, I don't even know if I should say this, but if you're a whale, like if you have balance, you know, there's 2 ways to win this tournament. And I'm just telling you, if someone wanted to, they could very easily deposit a sum of money into their account, make a few trades, and win the trading volume portion of the tournament. It wouldn't be very hard to do, I don't think. I mean, if you have a, you know, a bag to work with. God, ETH is the strongest alt right now. So look at this. ETH made a new high today. Look at Sol all the way down here. No new high. XRP all the way down here. No new high. Look at the difference, the disparity between the two. Look at that. Look at this. Look at ETH. The only alt. ETH is on one for sure. ETH is definitely on one. We're about to close H1. This is not very promising. Take the high and then none of these lows are taken. It doesn't look like I'm going to get filled on this, which would suck. I mean, I'm still short, so I'll get a little something out of this, but I obviously want to have a back-to-back. That'd be sick. If I could cop a back-to-back trade on the Tourney, like another 3.5 hour trade, that would my trajectory into, I don't know if I'd get first. That one fucking guy, man, whoever he is, whoever this person is, they're incognito. They won't say. I've asked in the chat. They won't tell me. Maybe they didn't see it yet, but they're up 92%. And man, if I got this trade, I don't know how much I'd risk. I mean, if I risked a decent amount, I could maybe catch up. But if I lost, obviously I would lose out on my gains so far. What's BCH? Is that Bitcoin Cash? Are you asking me to look at Bitcoin Cash? Oh, that's interesting. I don't have it on here. Yeah, that you are asking me to look at Bitcoin Cash. I do have it on here. Why didn't it show? Yeah, Bitcoin Cash has decent strength relative to other, well, yeah, decent strength relative to other alts. God, this is a weird chart. This is such a weird chart. Yeah, it's a strange chart. I'm gonna be honest, dude. This is like one of the most whack charts I've ever seen. I do not like the way this trades. Mr. Fool, what are you doing on this? You long, short? You have price targets? What's your angle on this thing? Ugh, goodness.
YouTube Premium, enjoy ad-free videos, plus the YouTube Music app.
I mean, it looks like it's running for a breakout.
Try 1 month free.
Looks like it's running for a breakout to me. Swept the lows. Broke out of the downtrend. I'd say if BTC plays ball, it could probably run. I don't know. I'm going to be honest with you, Mr. Fool. I don't like that. I really don't like this at all. I think this is a super ugly chart. I think this is a super ugly asset. Look at this. It's trading like the S&P 500. It just, look at this channel. It's just straight climbing. Like, there's no, like, what am I supposed to take away from this? This is ridiculous. It's not a very good, like for me, you know, I shouldn't say that, I guess. For some people, maybe there's edge in this and they like this, but man, I don't. This is crazy. Look at this. Look at this chart. I guess keep trading the range. I mean, this is crazy. I've never seen anything like this on a crypto asset. Literally is trading like the S&P 500. Yeah, I mean, even the S&P 500 looks cleaner, but this is exactly what it looks like right here. It's doing this. This is all it's doing. Boom. The difference is that the S&P just keeps going up and to the right. BCH has all this. I mean, look at it. It's up, it's down. I don't know. I don't like this asset at all. There's not a lot of edge in this for me. Totally ignored this level here. Completely ignored this level here. Didn't even trade like this level existed. Seeing some rejection here from like an order block. The S&P 6900. Okay. I will look at it. Oh. Suppose I'll look at BloFin. Yeah, like even this chart's cleaner than BCH. I can't believe that chart. I haven't looked at BCH in years, and I'm gonna tell you that I'm like stunned that that's a crypto asset. If you were to just randomly show me that chart, I'd be like, yeah, this is a stock or something, or like a indice. Probably not with all the volatility up and down, but yeah, crazy. What's the market cap on this thing? Wonder if it'll say. Average volume. This is on BloFin though. Yeah, it doesn't say the market cap on here. 1.6 billion. That's fucking pretty decent size for a meme. Yeah, I mean, even this chart is cleaner. It's actually not terrible. You know, for me, like, I judge how nice a chart is based on its reactions to things. And, like, you know, like, this is a small example, but, you know, you have this hammer candle here, move up, slow back test. So this is potentially profit taking, not really. This is fucked up. And so, you know, these are fucked up here. I attest that to memes. But the fact that it came back down into this hammer, back tested it, nice reaction, consolidate, continuation to the upside. It's a clean chart, right? And then you take a look over here, you have this low, We can even extend it up. It's a nice deviation. Slightly take out this low, fill down to here on this very, very small gap that got front run. Right? Level got front run. It came down, actually tapped that zone and had to move up. A nice reaction from there. It's like that's how I judge charts, is based on like stuff like that. Dude, if you look at BCH, like it on a fucking daily time frame, dude, like look at this zone. This is a really nice level here. Like this area. Completely ignored it for the most part. Like doesn't give a shit. It just chopped it up. Just chopped it up. Unclear. Just chopped straight through it. This level's getting a decent reaction so far. Reject, backtest here. But even still, like, I don't know. This is a wild chart.
Best Western is there to help you make the most of your getaway, wherever that is. Because the only thing better than a great playlist is a great trip. Life's the trip. Make the most of it at Best Western.
God, I hope we get this. I got about another 50 minutes of streaming, so I hope we clip up here for stream. Give me just 1 second here. I'm going to be right back. Like, literally a minute. Yeah, we're really getting teased out on this pump. God, I hope we fucking hit this, dude. I wanna hit this trade so bad. Doge is a good one to ask about, I think. The king of memes. Yeah, even this chart looks like shit, honestly. Let me look at... You know, here's the one thing I'm going to tell you, Mr. Fool. You can't fight a good thing. So when you look at something, you look at a chart like this that put in its high in December... Let's just call it like early this year, like January. I know it's December of last year, but you know, this year, earlier this year. It put in its high, and now it's doing like a high, low, higher low, but it's kind of like putzing along in this like lower range. And then you look at a chart like ETH, and it's gotten this insane move to the upside, and it's making new highs on the year. You know, you don't want to fight that strength. These are the assets you want to focus on. You want to focus on ETH over something like Doge. You know, that's not to say that it couldn't pop off. You know, of course, that can happen. But the idea, I used to think this way too. I used to think like, oh, what are the ones that have not reacted yet? Like, what are the ones that haven't popped off yet? And those are the ones that you need to take on. Dude, I actually closed that. I announced that in the group. I closed it because I had to, that was a long time ago. I had to do that for the trading bot I was working on because I couldn't work on the exchange while I had open trades. I had to close it out. I'm pretty sure I'm not pretty sure. I know I closed that for a loss. Where is that? Hang on a second. I want to pull that up. I have not looked at WIF in a long time. Hang on a second. Am I still on that? No. I'm pretty sure I'd close that. Let me pull that up once. Where are you, WIF? WIF. Where are you? Yeah, this is that trade. Would still be not even in profit here. I was taking a basic range trade. I thought we'd bottom out here. That was 8 months ago. That's a sick throwback, dude. No, I had to close this out. I did it. Let me think. I started working on that bot. Let me see if I can pull this up. Oh, fuck. It might not even be in here because we had to change channels. When we redid the Discord. Fucking Christ. Yeah, I don't even have that anymore. Because we switched the channels in the Discord when we redid it a couple months ago. When Tyson joined. No, I'm not in that. I am not in this anymore. And I did close it for a loss. Because I closed it somewhere back in here. It was before we updated the Discord. But it was when I was heavy working on that bot. It was somewhere in here. And I closed it for a loss. Almost like a 50% loss. God, I can't believe this is all WIF did since then. Let me pull this up once. Fucking 93% retracement. Almost 94. God, that's bad. What about ONDO? That was another one I was looking at too. There was a long-term trade I wanted to take on that. Let me look. ONDO. Yeah, I wanted to take a long-term trade off of this zone here. And again, that was based on a channel trade. And even that hasn't performed. Sui. So like even something like Sui looks a little bit better. Sushi, yeah. Sui looks better. XRP obviously looks decent. Sol, it's fine. SEI, fine. Link looks good. Link is showing strength. Yeah, I think my whole point is like I don't really when we're so all right, so we're at a point in the cycle where I do believe that we're probably within 2 months of the bull market ending. And so like when you get to this point, there are some signs that you can tell if we're going to go higher for longer or if things are going to end sooner than later. And so cyclically how this works, cycles can change too, by the way, so take this with a grain of salt. We've had a massive move up on BTC. If BTC decides to range here and doesn't continue its bull market and push way higher, and let's say ETH instead starts to run significantly against a BTC, we're seeing it happen now, but I mean I'm saying like significantly, while BTC pretty much like goes flat. That's going to be a sign that the bull market is very close to ending. What we'll see after ETH running it's going to be residual alts, other altcoins, smaller altcoins, lower cap coins, all of that kind of stuff, and then that's going to end up being the end of things. If BTC pushes up and has a really strong trajectory and alts and ETH kind of chill out a little bit, then that means that, you know, we still have more time in this bull market. But the reason I bring that up is because you want to look at stuff that has strength now, in my opinion. Those are the things that are going to keep running. I used to think, like, I've been in cycles before where I would, like last cycle, I was crazy about LTC. I wanted to trade LTC, Litecoin. Let me pull this up. So I wanted to trade at LTC, and this was, fucking Christ, this was, back in here, right? So LTC put in a high over here. And keep in mind, BTC made a new high, just barely, right? It put in a high at, it was 64 here, and over here it put in a high at 69. LTC barely made it, you know, 50% of the way up from where its peak was, right? A little bit more than 50%. I was of the impression that this would go off and make new highs, right? So I was long. I thought it would go higher, etc., and it never did, because it was lagging and it was weak from the beginning. It wasn't a strong asset. Whereas, you know, let me think of an example of what else there might be that did have like a better run up here. I don't know who the fuck keeps calling me. So, all right, so this is a great example, right? So here, this was when BTC was at 64. This is when it was at 69. You know, I would have been better off longing strength because I had this nice move up here and running a move up instead of longing LTC. I mean, it's still a decent move up. It was still a decent move up, but it didn't make new highs, right? And the expectation is that you think that you're going to catch that into that move higher, but it doesn't end up coming. And so, you know, for me, I always like to stick to the ones that have that strength. Let's look at Sol on that last cycle too. Let's see what it did for that same exact time frame. That was going to be September. By the way, if you guys haven't seen Spank's new post on like BTC cycle, you should check it out. It's really fucking good. Like really good. It's like one of the best posts I've seen on all that. Yeah, so this is another nice example here where, you know, this chart at the time, you know, God, yeah, this was September right here. I mean, so this was when BTC was at 64. And this was when it was at 69. And so it's about longing something that had strength, right? You know, you're looking in here and you see this move up and it's consolidating here, and then it has this break to the upside. You know, this was around that mark, right? So that dip down that we saw, it was around this mark. It was actually in here, but it was around this mark. And longing that strength would have paid out significantly higher than, you know, trying to trade out something like LTC that you think, well, just because everything else is popping off, I should long LTC too. You know, it never went off and made new highs, and that's the expectation. You think it's going to go, and then what do you end up doing? You hold through the top, and you get fucked because you think this is going to end up running higher. My point is like, the market reveals to you what it likes. It tells you, it blatantly says what it likes. And what keeps you from entertaining it, you'll say to yourself, well, I think it's ran its course. You know, I think it's ran its course. I don't think it's going to go any higher. And then it goes significantly higher. I think that that's kind of the whole point of it, is looking at stuff like that and seeing what the market is telling you that it likes, versus trying to like take a look at or whatever it might be that hasn't popped off yet, right? The market very clearly likes XRP. I don't know how much higher XRP can go. The market very much likes Ethereum right now, and it's breaking out. I mean, it's fucking close to all-time highs, for God's sake. When it gets into price discovery, it could really run. Yeah, Doge. Algo, ADA. All these charts look the same. God, I hope we get this short on stream. I only have 30 more minutes on here before I gotta run. $1K by mid-2026. It's a pretty long timeline. You know, here's what I'm gonna say for higher time frame shit. Let's see. I gotta find this chart. For higher time frame shit, this is the chart I always refer to. So bull market high to bull market high, 211 days, or 211 weeks. Bull market high to bull market high, 204 weeks. Bull market high to bull market high, 204 weeks is what I'm projecting, right? So somewhere between that 200 to 210-ish, whatever, like low 200 weeks, right? That's where I would say the bull market high is going to be in. That's what it's been for 1-2 cycles prior. That's the data that I have to work with. There's also a number of other you know, from bull market bottom to the top is the same length on both of these. So if I were to take, so here's what I'm going to show you. These two major confluences from the bottom of the bull market to the top of the bull market for the last bull cycle would mean that this bull market's going to end the week of October 6th. Monday, October 6th, that week, this year, bull market should top. Also, if you take 204 bars from the last peak to this peak here, and then you do the same thing here, it's that exact same week. So there's two forms of confluence from historically looking back at cycles and how they, in terms of time, tend to rhyme or repeat themselves. I'm gonna start to assume shit's done that week, early October. I'm gonna be sitting there and I'm gonna be like, yeah, I think I'm good. I think I'm good. And look at this projection. Look at this. I drew this out back in February. I said we'll come down here and then we'll get this move up, and boom, there it is. It's fucking crazy. I haven't looked at this chart in a long time. But, you know, that's how I look at it. Maybe I should post this in the Discord. I haven't talked about this in a long time.
Welcome to a moment of calmness from one a day. That's right, a calming moment from a vitamin brand. Wait, don't zone out yet. One a day multivitamins help provide nutritional support for your well-being as part of a healthy lifestyle. Whether you're navigating a busy day or seeking quiet reflection, one a day.
Yeah, so, I mean, how do we look at this?
Choose wellness. Choose one a day multivitamins.
We have 8 more weeks. 8 more weeks of fun.
Vitamins at your favorite retailer today.
Yeah. Yeah, I did a deep dive on this a long while back. And this is the conclusion I came to. October 6th, that week. Maybe it goes a little bit longer. Maybe it's a little bit shorter. October, really just the month of October. That's when I've told all my friends and family and everybody who trades crypto, I said sell everything in October. You know, do with that information what you will. Pfizer. I'll buy it. God, that's hilarious. There's like no chart information on this. Yeah, I mean, I can't see any reason why Pfizer wouldn't. I mean, my knee-jerk reaction to Pfizer is that it's gonna go lower. I just don't see any reason why it wouldn't. Could basically range. Could range in here, deviate here, range, or it's just going to go lower. With everything that's going on in U.S. politics related to healthcare and vaccines, I wouldn't be surprised if this goes lower. I mean, I don't know. I'm not an expert. I don't follow this chart. I don't follow all of that stuff. But my knee-jerk reaction, just looking at the chart and like having some loose idea of U.S. politics related to vaccines. It's a really big question that you're asking, and yeah, I would love to talk about it. It's one of my favorite topics. Let me get some music going. There we go. It's a great question, Tom. And I really love... It's something that's not talked about enough. So I'm going to use it in the obvious example, which could be what you're referring to, which is this chart. So, you know, like here, for example, what I've done is I take the bull market high to the bull market high, and I just estimate. And then I'll do this bull market high to this bull market high, and then this one to this one, just to see if there's some correlation amongst them. And then I'll take, you know, the distance between a bear market low to the high, from a bear market low to a high, from a bear market low to a high, just to see if there's some relationship between all of these things in terms of time. And there is. And again, that puts all of us early October, right? Both of these metrics put us in early October. And, you know, I think that these crypto cycles are clearly cyclical, right? There's something happened there that's cyclical. It's every 4 years. You could even argue that with the entire market as a whole. And it makes sense because you're going to have a move up, and then people have to take profits who made money, or price needs time to sort of relax. It can't just always move up. And if you look at price, it spends the majority of its time consolidating. I mean, like, I know that there's runs up and stuff, but really price spends the majority of its time consolidating. Like, this is consolidating, this is consolidating, 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 consolidating. You know, these moves are very short. So it's like a few weeks. They're not very long, these big moves. And so that's that explanation. Whoops, what did I just delete? There we go. I want to be sure I'm not deleting shit I shouldn't be deleting. Now, the other aspect of time I want to talk about, and this one in my opinion is more useful. I can often sit here and say, like, when a move is done or when it isn't done. So there's a couple ways you can look at this, and I'm going to try my best to explain it, but it's better when it happens naturally for me. Like, when you see me, I did this yesterday. Where was price? Let me look. I did this yesterday. It's a good way to explain this. So when you look at, if you can understand where price is on the chart, and then you see a candle, you can have a pretty good idea if that candle is done cooking. So, you know, you have this move to the upside here, and you have this move to the upside here for these two candles. We go down to lower time frames, and you see we get this move up. H1 closes here. And when that happens, you would sit here and you would say, yeah, I think that, you know, we're not going to see more volatility until the next H1, until the next 1 hour candle. And the reason why is because if you look at these candles, like, there's a maximum amount of volatility per H1 candle where you're like, this is the most I would expect it to move. You have your outliers for sure. You know, like this candle is especially an outlier. This is a pretty big 1 hour candle. But for the most part, if you look at all these 1 hour candles, you can sit here and say, yeah, you know, they have a relative size to one another. So, like, for example, like this candle here, I would argue that for the next 20 minutes, we can test this theory. The high and the low of this candle are probably, I would hope that they would be. I don't even want to say it because obviously I want price to pump up to here. But you could argue, you could look at this candle and say, it's pretty likely that, you know, this candle's volatility has been maxed out. This is going to be the high and the low of H1, even though we have 20 more minutes of this candle. It's likely that the volatility is in on this. And so when you see something like that, or when you start to acknowledge that in terms of time, you can look at it and you can say, well, I'm not going to enter a trade until the next H1 candle, because that's when the next bit of volatility will take place. All of the volatility for this candle has already been placed. You know, we're not going to have any more volatility with it at all. And so you can go on to lower time frames and you can start to say, all right, if we were to have some kind of a rejection or a pump or whatever afterwards following that candle, you know, where would I want to position myself? And you can do this with every time frame. So you can go on to H4 here and you can say, okay, well, H4 has had quite a bit of volatility. We had to move up here. If we closed, so all right, so this is, my mind's actually going here now. I could look at this candle and say, all right, I think that the high and low for this H4 candle are already in. Price is only going to stay inside this range until the next 4-hour candle closes. So if the candle closes, you know, like this, something like this, I would expect it. Sorry, I was reading the comment there. I lost my train of thought. So we have an hour and 40 minutes left for this H4 to close. So I can look at this and I would say, you know, it's pretty likely that this is all the volatility that I'm going to get from this H4 candle. It's likely that we're not going to see more volatility until after 11 o'clock. So we have an hour and 20 minutes for this H4 to close. I would then say to myself, I'm not interested in entering a position until the next H4 candle, because it's likely that we're not going to have enough volatility that either breaks us to the upside or breaks us to the downside here, which is what I want to trade for. I don't want to enter a trade early. I want to get a good entry, and I want to hold that position through a move down or a move up following right away. I don't want to position myself and have to sit on my hands and watch my entry be revisited or potentially get stopped out, or for, you know, whatever else it might be. And so in terms of time, you can look at this and you can say to yourself, yes, the maximum volatility for this H4 candle is already in. I'm going to wait until the next H4 candle for the next bout of volatility. I do this all the time. You'll see it on stream, like in the morning. When I do my live streams, I'll sit there and I'll look at a candle, or I'll look at kind of price action. And I'll say, well, I don't think we're going to get our target hit on stream. I'm going to end the stream here today. You know, I'm going to keep an eye out for it later today, because again, I'll look at it and I'll say, I think we've reached the maximum volatility for this H4 candle. I have an hour and 20 minutes to kill until the next bit of volatility takes place. And like when I look at this, for example, and I want to short up here, this would be my specific setup where I would say, if we closed below this daily here, this is really, really nice. We have this wick, we're closing below. This shows that bulls don't have the strength to maintain higher price levels. I like this because I want to short. And so I would see this and I would say, this is a trap. This is a trap for people who think that, oh, we held this as resistance, we're not going to take out the high, and then the next H4 candle does something like this, and then again closes below here. And I would look to enter on this new bit of volatility where I try to catch the high of that H4 candle that would then close at 3 o'clock. You know, and then I would sit there and maybe I entered and I caught it and it did close below here at 3 o'clock. I would say, okay, now that, you know, that H4 candle is closed and it confirmed this as resistance, I'm going to look to the next H4 for our bit of volatility. If we come in here and price starts like chugging back down and it's hanging out here, I would say, okay, we've reached the maximum volatility likely for this H4 candle. So you can look at these candles and you can just, it's easy to see. You just look relative to all the other ones. I mean, you can see the maximum volatility that they usually have. If they put in some kind of a volatility like that, especially early on in the candle, or we're past the midpoint of this H4 candle here, you would look at it and say, yes, we've achieved the maximum volatility for this candle. Time-wise, I'm going to wait or look forward to the next candle. Now, the other bit of time, yeah, dude, Tom, this is a big unlock. That was some major low-key alpha big unlock. The other aspect of time is you can look at certain things and you can say, well, we've consolidated for this long. You know, you can look at, and then it took this long for this move to happen. You can say, well, I think we're going to consolidate for that same amount of time, and then I think we'll get a move up that takes this same amount of time. And you can start to look at those sort of things too, that will give you that idea of, like, you know, how long it'll take for a certain move to happen. how long a certain move takes to happen can also act as a form of invalidation or confirmation for a specific move. So if you're waiting and waiting and waiting and waiting, and like let's say you shorted in here, you shorted in here, and you're waiting and waiting and waiting and waiting, and you expected that move to happen here in this time frame, right? And it didn't come, you could then look at this and say, well, in terms of time, my trade is invalid. Like in terms of time, I shouldn't hold this anymore because I thought it would happen faster. So I do that a lot. Like there will be a lot of times where I'll close trades based on time rather than based on price or certain price confirmations. Just because it makes a lot of sense. Give me just 1 second. I'm going to come back, and then Shrug, I'm going to answer your question. Just give me 1 sec.
For those who want more out of every moment this summer, Mazda has more 2025 IIHS Top Safety Pick Plus awards than any other brand as of May 2025. What more could you ask for? Discover how Mazda has more to move you today. Visit iihs.org to learn more.
My only question is who's orchestrating this stuff. There isn't any one person who can control a market of this size. They can push it around or bully it as much as they want. There are certain candles that they can't bully. I'm going to answer your follow-up question very quickly, and then I'm going to answer Shrug. This is why trading on higher time frames is quote-unquote easier than trading lower time frames. This directly answers your question. Tom asked, who is orchestrating this stuff, because it doesn't seem completely random in terms of like the maximum volatility per candle or like how it behaves like that. This is why higher time frames are easier to trade, because it's more difficult to manipulate a higher time frame candle. If I drop down to a 1 minute time frame and I say, well, this should be the maximum volatility for this candle. Well, someone with a lot of money, a lot of gunpowder, a lot of powder can come in and really push the market around. Like you would say, oh, this level should act as resistance, and someone will say, yeah, okay, it will, but I'm gonna pop it all the way up here first because I have the powder to do it. Or like a 5 minute candle, they can bully these candles around quite a bit. These lower time frame ones, they can literally bully them into having big wicks like this, or like that's why lower cap, alts, they'll not respect levels as cleanly, because someone with enough powder can bully it around a little bit more. But if you go into higher time frames, these candles cannot be bullied as much. They're made up of a lot of smaller candles that are pushed around, but at the end of the day, there is a maximum volatility for some of these, and you can much more clearly understand like where these higher time frame levels are going to come into play. So like if I look at, if I look at like, this order block here, this is not a great example. I wish I could find a better one. This isn't a great example, but I'm just going to use it. So like, let's say this order block here, this order block, because it's on a higher time frame, is, you know, almost 1%. It's like 0.75% big, right? So they can try as much as they want, but they're not going to move price 0.75% to fuck around with this order block and maybe like push above it or do something where price doesn't completely respect the level. They're not going to, you couldn't do it. It's just not something that is going to happen. But if I go down to a 1 minute time frame and I find like this order block here, you know, this order block is 0.1%. So yeah, they could bully it around, and they could, you know, you could say, well, it should act as resistance, which it did here. But someone very well could have had said, well, I think people are going to try to short here. I'm going to bully it around, and I'm going to wick above, and then we'll get the move down. It's a lot easier to manipulate, is my point. Higher time frame stuff is not. So is it completely orchestrated? No. What you're seeing is the collective consciousness of millions of people trading a single asset together. This is psychology in chart form. This is fear and greed in chart form. It's... I thought someone was fucking talking. It's an ad. So, yeah, I hope that answers your question. Shrug asked, why do you have your stop loss at the SFP? For me, that's a better place for an entry than for a stop loss because there's both an SFP and a fair value gap. So it's a good question, and the easiest way for me to answer this, and then I'm gonna get a little bit more detailed with it, is market structure. So we have a low, a high, a lower low. If bearish market structure continues, you'd put in a lower high and then a lower low, right? If we come up here, there's potential for a market structure change, which could then make it less likely that there's going to be a trade there. Could it be an SFP where it comes up and then closes below and then gets a move down? Yes, but is it possible? Yes, absolutely, and it does absolutely happen. It's not something that I would be willing to bet on because of the overall context. Now, if the local high was SFP'd, that would be a different scenario, right? This isn't the local high. This is a lower high, right? The local high, the highest of the highs, if that was SFP, then yeah, you would look for a bearish market structure change and continuation to the downside. But for a lower high, no, in this case, I would just want to see bearish market structure continuation. I'm going to follow up on that, and I'm going to say there's a lot of confluence here that in my opinion, we don't necessarily have up here. There's a good amount of liquidity. We have, so the daily naked point of control. So this is yesterday's value area. I know that maybe a lot of you aren't familiar with looking at exo charts, so this could look kind of confusing to you. But I'm just going to very quickly tell you what this is. So you have the value area high, VA, VAL. This is the value area, your POC. This is today's. You can see it's broken up. So this is today's price action. This was yesterday's price action. The value area was between here and here. Yesterday's point of control is at about 120, 100, and it's naked. Naked point of controls usually act as magnets for price and can act as support or resistance. In this case, resistance, being that we have a daily naked point of control at this level here. I think bodes really well for it to be a spot for a lower high for bearish market structure continuation. If we switch this up and go on to sessions, this is purple is New York, green is London, yellow is Asia, red is Sydney. So this is Australia. We have a naked session point of control at 120, 100 as well as the daily naked point of control that I just pointed out. Yes, there is one higher here, but this is the first form of resistance, and it would be a good spot for, again, a lower high and bearish market structure continuation. If I pull up the chart here and we go ahead and, put on our moving averages, and then let's go to H1 here. So we're coming up on moving averages. We have across downwards. These two, this is the 200, this is the 89. The dark blue here is the 55, and the teal is the 21. If we get up here, it's likely that these are really going to be rolling over and starting to flip and get, you know, starting to move upwards, and then we have potential for a bullish crossover, right? I want to see a very quick move up into here where it deviates and then comes back down. So this will slightly still move up, but then this one doesn't quite cross over, and then they start to roll back over like this and get some kind of a move down. I just want it to be a deviation. If we get up into here, I would start to get concerned that we're rolling to the upside, and we're going to actually start to see continuation to the upside. In addition, I know a lot of people, especially with Tyson, really love the really love the anchored VWAPs. Yeah, and again, we're starting to see that here. It's fine to deviate, but I really wouldn't want to spend too much time. If I pull up our anchored VWAPs, the anchored VWAP from our local high here, so this is the average weighted volume price. So from all of the trading, this is based on actual trading, this level here. If we look at that, you know, it's right around this level here at, you know, 119. So you can see we just barely tapped. You can think of it as a zone. It just barely tapped and rejected from there. Again, I'm looking for a deviation of that level, tapping the daily naked point of control and the daily session point of control there, and then a very aggressive move to the downside, you know, towards this zone here where there's quite a bit of liquidity. Being this close to Monday low and not taking it seems like a trap to me. Again, if price comes up into here, I start to, my mind is sort of going to flip a little bit and think, maybe we're going to see some continuation to the upside. I'm going to be less likely to think that, you know, we're going to reject from there. And again, going back to my original concept where I was talking about max volatility per candle, you know, let's say we close this H4 here like this, you know, we close the H4 here like this, and you want to talk about maximum volatility, you know, what if this candle is also this same size, you know, where this is a 1.2% candle, you know, and you want it to sweep that high and then maybe come back down towards the daily open, you know, it would look something like this. If we start to push higher and I'm still looking for a rejection, you know, what are the odds that we're going to have a 2% candle and then reject below this daily, which could be considered an SR flip zone? If we closed above that on the next H4, which would be more likely if we actually did achieve these levels up here, I think it would be less likely that we're then going to see a move down. So, you know, is it possible? Absolutely. You know, this is a zero-sum game. This is totally based on probabilities, and you have to take risks. And am I, you know, 100% certain that we're going to get a move into there and reject? Absolutely not. I am absolutely not 100% certain of that. But what I'm looking for is overextension. And to me, this is overextension. This is beyond overextension, which could signal a local trend change. So that's why I would look at it that way. That's why I feel that way. And there really isn't a clear level here of rejection. If you're looking at M15, there's a nice M15 fair value gap here that could act as resistance as well, which would be a good spot for, you know, moving averages in a lower high here and everything to sort of continue. So we could, you know, deviate the M15 200 and then get back down and start to roll these back over. You know, and that for me makes more sense. If we come up into here, you know, that's, to me, that would be beyond, potentially beyond a deviation. So something like this, like instead of deviating, we got that move up and then, yeah, it rejected, but then it flipped to 200 and had continuation to the upside. You know, if we got a move like that, you're going to want to start thinking long instead of looking short. Versus here, this is a really nice example. Versus here, the 200, we came up and deviated and then immediately got that move down back below it, despite the fact that some of these were starting to curl to the upside. That's what I want to see. This just seems too high. It's too much for me up here. Possible. Very, very, very possible. I'm not going to sit here and say, no, that's not going to happen. You know, the SFP, more or less, that I would be looking for would be like off of this level here. You know, to me, this would be a more clear SFP where it came up, popped up above here, closed below this level, and that would signal continuation to the downside. And like I said early this morning, my initial plan was that there's going to be a pump that traps early longers, people who think that, oh, this is the bottom, we're only going to have up only from here. To me, this is what traps early longers. They're engineering liquidity to the downside. People are going to come into here. We're going to get this move up. There's going to be a lot of longs trapped into here. Maybe we do some kind of a back test and then very quickly descend towards this 117,600 zone. So, yeah, I hope that answers your question. I don't know if you're still in here. I hope, because I know it took me a minute to get to your question after answering the other ones, but that's my general thoughts or position on something like that. That's what makes the most amount of sense to me, for now. So we just closed H1. You can see, you know, having now closed this candle, we can now have a new form of volatility. So price, you know, again, if we just look at the size of this candle, we can either, you know, do something, fuck you. We can either do something like this or do another candle like this for consolidation, you know, or maybe it does kind of a high and low here, but like this is the size that I would be looking for when I think about this next H1 candle. And what this tells me is even if it comes up into here, it's likely that maybe the next H1 candle isn't going to be the high, but the one after that, which again bodes really well for thinking that, you know, we're going to tap this area and reject from it on the next H4 candle instead of the current one. These are all really great questions, guys. It's funny because, you know, these are the things that go through my head when I look at the charts, but they're not things that I think to say out loud. You know, I'm always thinking in terms of time like that. I'm always thinking in terms of like maximum capability or volatility for a candle and like where, how, what time should I look to enter position versus others and things like that. So I'm glad you guys asked or it was brought up because you know, it's always things that I'm looking at or thinking about as I'm charting, but I would never even think to bring it up. You know, it's sort of like a secondhand thing that isn't taught. I've never seen anyone talk about this. You know, it's not, there isn't a tutorial talking about expected volatility on candles based on time and things like that. Because a lot of times I think for traders it's intuitive. It's just something that over years and years and years and years and years and years and years of trading, you start to develop sort of that second instinct where you're like, yeah, you know, I'm not going to enter my position now. This isn't a good time to do it. So yeah, great stuff. Great stuff. So I'm going to go ahead and call it there. I got to run. Thank you all for joining me. I'm going to be back later today in my office. I'm not going to be doing any streaming or anything like that, but I'm going to be around on the charts. I'll be shooting the shit in the tournament chat. I'm going to keep watching. I'm going to keep watching for this trade here. This short, I think this is going to be a really, really nice short position. And then, you know, you guys, of course, will see if I decide to take it. I'll be sure to update you. Tom asked, do you still do the daily open and New York session streams in your private community? This stream that I'm doing right now is normally private. I've decided to do public streams instead of my private ones all week. Just because we just started our trading tournament yesterday. We have a free tournament chat. It's open to everybody. You don't even have to be paying for one trade or anything like that. You don't have to pay for private to access the tournament and have and possibly win some money. Anyone can join it. So Tom, if you want to hop in and join that with us, you're more than welcome to. We have a free section of the community. It's the tournament chat. So this week, like this stream that you're seeing right now would normally be private. This would normally be a private stream, but I'm doing it public today as sort of like a kickoff for our tournament, and I'll be doing them public for the rest of the week. So we'll go ahead and end it there, guys. As always, thank you for joining me. I will be in office later today, taking a look at trades and setups and all that. I'm pretty eager and aggressive to trade with this tournament. I would love to obviously win this thing. I'm very competitive. So thank you for joining me, and I'll see you all in the Discord.
For those who want more out of every